Now we're in the spring market, what to expect? Are we going up or are we going down? It seems like it's sort of a common conversation that we have every month. But today, I'm gonna give you some clarity and break down the numbers. Also share a few different, some different stats with you to help keep you better informed with making decisions in the market, especially here in the Colorado Front Range. Hey, it's Kevin Shoemaker with eXp Realty, and we help clients across the Colorado Front Range buy and sell homes over the last 30 years. And we always want to bring you the facts and the information so you can make better decisions whether you're buying a home or selling a home. I want to share my screen here and share a headline or a clip I saw yesterday. It was, headlines do more to terrify than they do to clarify. And what we mean, why I share that is because there's so much chatter out there of where the market's going. You have national headlines, you have local headlines. And what does that look like and how does that affect you and how does it impact you? I believe that numbers force decisions, and when you have the numbers, you have the information, you can make educated decisions. So when we take a look at this graph here, talking about consumer spending. Consumer spending declined for the first time in nearly 2 years in January, and a lot of it's the unknown. It's what headlines do you believe? I'm not telling you not to believe it. I'm not telling you to believe it. But looking at the numbers, yeah, there is a little bit of a slowdown because there's a lot of uncertainty. And when you look at the market, I'll share with you some of the graphs that show inventory rising. A couple things to take into consideration. We always talk about the seasonality curve. So we have the seasonality curve. We have the ramp up of inventory post-pandemic, just trying to catch back up to the norm, and then we have just your typical pent-up demand of when you come out of a declining or of a stagnant market like we have been over the last 18 months, and you have that pent-up demand of people expecting interest rates are going to come down, but they haven't come down. So I'm going to break that down and we're going to talk through that. When we talk about, there's a lot of chatter about recession. Are we going into a recession? Are we not going into a recession? The last article I read, somebody said there's about a 40% chance that we're going to hit a recession. Well, how does that affect us? Well, when you look at the last, 6, 7, 8 recessions, only 2 of them did we have a negative impact on home values here in the U.S. And these are national numbers. I remember in 2008 when we went through that recession, our inventory was probably just in one market alone, where we're currently at 250 homes on the market. At that time, there was almost 1,800 homes on the market, just to give you sort of a point of reference. So our inventory is substantially lower than what it was back at that time. But excess inventory is what drives a recession when it comes to foreclosures, short sales. The other difference to remember is, and unfortunately I don't have a slide here, but I've showed it in previous months, is that the average, over 52% of the homes owned have greater than 50% equity. Over 40% of the homes that are out there and owned in the US are paid for free and clear. So we have a very equity-rich economy when it comes to homeowners. And also when you look at the percentage of homeowners that are sitting on interest rates below 3.5%, they're over 45%. So we have homeowners that are in a very good position and not near as leveraged as what they were in 2008. So I just want to share some of those numbers with you, hopefully take away a little bit of the fear of, are we going back to 2008? No, we're not. Can we continue to have a decline in the market? Yes. But again, when you have the information and the numbers, you can make better decisions. Now, what does recession mean? Well, historically, it's meant that we have a drop in interest rates. On average, we've seen about 1%, 1.5% in a drop in interest rates. We do believe that as we get closer to the end of the year, we may see a 0.5%, 0.75% drop by year end. But the timing is always important, because is a small drop in interest rate going to be as impactful as the right home hitting the market that has the right amenity, has the right feature for you, because you can always refinance. What we do anticipate is 18, 24 months, rates will slowly start to work back down. But we've had so many people waiting 18 and 24 months for rates to drop, and they haven't. And what they've lost out on is loss of opportunity, loss of enjoyment. And for many, they've waited and waited and waited because they've been in that small home. Their home is, their families has expanded, and they lived in these tight quarters, and finally they're just frustrated and they're like, we're just getting a bigger house and we're gonna make the adjustments and we're gonna figure it out. And that's where when I say the pent-up demand, we're seeing a lot of that. Number of new homes on the market. You see a lot of the headlines will talk about more new construction homes than what we've ever seen. Well, yes, we do have definitely more new construction homes currently on the market, but when you look at the pre-pandemic levels, we're still substantially lower than what we were back then. So currently we're sitting about 119,000 homes, brand new homes currently on the market, and that's half of what we were back in the pre-pandemic. So again, you really want to take a look and understand the numbers, because when you look at pre-pandemic numbers and then you look at post-pandemic numbers, these builders are ramping up inventory, just trying to get us back to what the norm is of a normal inventory and normal selection, which I'll share in just a minute. 31% of the total inventory out there is new construction, which is rather normal. And actually, as you get into normal markets, many times that'll hit 40 and 45%. When you look at the total listing count, our total listing count definitely has increased. When you look at right in the middle there for March of 2025, when you look at where our numbers are inventory-wise, right below that is green. That green number is going to be 2024. So we're above by 17%. We're above what we were in last year. Then when you look at the orange number, that's 2020. Okay, so if you look at, we're still below the numbers of what we were when the pandemic hit. And then the lines, the blue and the gray lines, are all going to be pre-pandemic numbers. So we still are tracking below what we were pre-pandemic as far as inventory. And then all of the colors of the green going into the orange down below, those are all going to be post-pandemic inventory lows. Now, some people say, well, we're going to maybe exceed those numbers. Well, if we carried it out and just said, okay, if we are 10% higher than what we were last year, what's those numbers look like? We're still below the pre-pandemic numbers. So inventory is still tracking at a very healthy rate. Again, a lot of it driven by new construction. Let's dive into the local numbers. When we look at inventory and the inventory of current homes, again, we talk about the seasonality curve. We can see how inventory ramped up in November, December, January. Now we're starting to see a little bit of flattening in the inventory. Inventory dropped a little bit because we started to see an increase in spring sales a little earlier than normal. Currently sitting in Fort Collins, 545 homes. Loveland 587, in the Greeley market 581. So pretty consistent as far as inventory in our three major areas. When you look at new listings coming onto the marketplace for the month of March, 381 in Fort Collins, 393 Loveland, and 377 in Greeley. Again, you can see when you go back to December, and then the inventory, new listings because of the holidays, and then January, and then all of a sudden we see that spike. Again, it's the people, spring is here, things are greening up, and that's where we really start to see all of our new inventory hit, as people get ready to make their move, especially as school gets out, and they want to get settled before school starts again back in August. Month supply of inventory. Again, the seasonality curve. So here you can see we're still sitting below 3 months inventory. When you look at what is the balanced market, a balanced market is about 5.5 months. So that means that you have 5.5 months of inventory. So now if one home hit the market, we'd have 5.5 months of inventory. When you get below that, it's going to lean towards more of a seller's market. When you get above it, it's going to lean more towards a buyer's market. So officially, technically, we would say we're still in a seller's market because we still have a low amount of inventory out there. But what I will say is that if you don't price your home right, it's going to sit on the market. If you don't go through all of the steps to get your home prepped and ready for the market, you're going to sit on the market. Closed sales. So here's sort of a look back at what the market's doing. In the March, 226 homes sold in Fort Collins, 215 in Loveland, 256 in Greeley. So again, you can see the spike as we get into the spring market. Our numbers are still down from what they were a year ago, and even when you go back even in 2023 and so forth. Not by much, but we're still down a little bit. Average days on the market, again, we're looking somewhere in the 60, so 67 in Fort Collins, 72 in Loveland, 82 in Greeley. So again, we're starting to see the trend of average days on the market going down, primarily because of the spring market. What we are seeing though is again, if you don't price it right, if you don't do the things you need to do, your home is going to sit on the market. Under contracts, again, this is the spike. This is the pulse. This is what's happening today in our marketplace. 331 homes currently under contract, 304 in Loveland, 334 in Greeley. So you can see we're about 75 to 80 homes more under contract than what closed in the month of March. And then we look at the median sales price. You can see average sales price we're tracking in Fort Collins, $579,000, Loveland 518. In Greeley, $455. So when you look at $120,000 spread from Fort Collins to Greeley, so that's a big spread. So if you're looking for affordability, there's some great opportunities in West Greeley, and when you look at something in the middle, there's still a lot of growth, a lot of new construction. We're seeing still a lot of great opportunities in the Timnath area, the Windsor area, Johnstown. So if you're looking for some new construction, there's some great new construction opportunities. We're still seeing some good, strong rebates. We're still seeing interest rate buy downs from many of the builders as well. So if you're looking to make a move and you're wondering how's the market affected our home value, go to localmarketvalue.com. That'll give you a quick snapshot of what the market is speaking in general value of your home. If you want to dial the numbers in a little bit more or understand what could I do to maybe increase the value of my home or maybe position myself to get ready to put it on the market, give us a call. We'll be happy to come out, sit down with you, go through the numbers. If you also are thinking about, well, what's out there on the market? What would the perfect home look like? And you want to just sort of snoop around a little bit, go to findhomesinnortherncolorado.com. That's a backstage pass to our buyer home search site, and that's going to give you, like I said, a backstage pass right to the MLS, real-time data on what's out there, the inventory, whether you're looking for a condo, single-family home, acreage, luxury home, waterfront, you name it, they're all in there. We're here to serve you, all up and down the Colorado Front Range. Again, it's Kevin Shoemaker with eXp Realty, and we appreciate your loyalty. We appreciate the referrals that continue to send, and we're here to serve you.